Be Wealthy and Smart, episode 1101.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about wealthy millennials who see cryptocurrency as the best investment. This actually was based on a survey done by Bank of America. It was their annual study of wealthy Americans where they polled 1,000 Americans aged 21 and older with investable assets of over $3 million. There were many things in this report that were very interesting, and I think it's especially interesting because we're in this year of a difficult stock market, because we are experiencing a bear market, and really the places to invest have been few and far between. I mean, crypto's been in a crypto winter, the stock market's in a bear market, the bond market's been crashing, real estate is experiencing a pullback due to higher interest rates. There really haven't been a lot of safe traditional areas to invest in. So this was particularly interesting to see how people's moods have changed. Now, the interviews in this study were conducted in May and June. It's not quite up to the minute, but it does give us some practical research that shows us what people are thinking about their investments. So the report found that 75% of those surveyed between the ages of 21 to 42, who are the millennial generation, felt that it was not possible to achieve above average returns solely on traditional stocks and bonds. And 32% of those aged 43 and over said the same thing, that it was not possible to achieve above average returns solely on traditional stocks and bonds. The wealthy millennials surveyed said they allocate 25% of their portfolios to stocks, compared to 55% for older investors. And they dedicate over 3 times as much of their portfolios, 16% versus 5%, to alternative investments like private equity, commodities, real estate, and even art. Cryptocurrency became more popular for millennials and accounts for 15% of their portfolios compared to only 2% for older investors. Now that's really interesting, but it's not that surprising. I think the younger people have adapted to the technology more easily, and they've seen multiple crypto bull markets, so they're seeing the spectacular returns that cryptocurrencies have had, like I wrote about in my book, 3 Steps to Quantum Wealth. Much, much higher returns than the average returns we've seen in the stock market historically. And this year, with the stock market being in a bear market, well, I think that makes it stand out even more because certain cryptocurrencies are still doing well, even though they've pulled back. They've made some good advances this year, and we've seen some cryptocurrencies start to move again. When we look at historically what the stock market has done since it bottomed in 2002, we did have the Great Recession, but beyond that, for the rest of this time since the millennium, we have had the S&P 500 on an upward trajectory. For example, people who invested $100 in the S&P 500 in 1950, 1960, 1970, 1980, and 1990 respectively would have seen roughly a 10 to 11% average annual return in their stock investments through today. An investor starting in 2000 would have only seen roughly a 6% return in the stock market. So it's not surprising that younger investors aren't as confident in the stock market as older investors are. Kenneth Shepard, head of private bank investments at Bank of America, said younger generations have been raised during a time of incredible advancements where new innovations are quickly embraced and old innovations are quickly discarded. This mindset is likely being applied to investments where non-traditional solutions, such as alternative investments and digital assets, are being viewed more positively than stocks and bonds. He also said many younger investors have formed their views on the market growing up during the dot-com bubble, financial crisis, pandemic, and 2022 inflationary environment. This may have led to the belief that there are better ways to invest their assets than traditional investments. Now, what's interesting is when you go to investors who have at least $10 million in assets, their opinion changes. And 49% of those surveyed agreed that stocks couldn't be counted on to generate above average returns, but 51% thought they could be. And 42% of investors with $5 million to $10 million thought stocks couldn't be counted on to generate above average returns, and 32% of investors with $3 to $5 million in assets agreed that stocks could not be counted on to generate above average returns. So very interesting that we're seeing $10 million in assets and above being more confident in stocks than those in the $5 to $10 million category or $3 to $5 million category. Interestingly, the wealthy millennial investors ranked cryptocurrency or digital assets, real estate, private equity, and direct investment into companies offering the greatest opportunities for growth. Of course, private equity being companies that you can buy before they go public on a stock exchange, so pre-IPO. Older investors favored U.S. stocks, followed by real estate and equities in the emerging and international markets. Americans with less than $3 million in assets will likely find it difficult to add private equity and direct company investments to their portfolios. Stocks and cryptocurrency are easy for them to invest in, though. All of the groups thought that real estate was the one investment that they were confident about investing in going forward because it historically has been an excellent inflation hedge and comes with a tax break, insulates buyers from changes in rent and housing prices, and diversifies one's investments. So in summary, 75% of rich millennials don't think the stock market can generate the returns they're looking for. Only 32% of older investors thought the same, and younger investors are flocking to cryptocurrency, private equity, real estate, and even art for their investing future. I will leave a link to this article in the show notes in case you want to take a look at it. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.